Welcome back to Business Bootcamp number 3. We're in week 3, and today we are talking about so many fun topics for business owners. We talked a little bit about inventory management in our last class. And really, if you have a business that has manufacturing or retail, I just want to emphasize that you make sure you have a system, an inventory management system that you're going to use to keep track of all of your inventory, keep track of items that come in, when they come in, keep track of how much you're going to value the inventory of the items, and making sure you're tracking all that information correctly, because you will need to do manual inventory checks. I always suggest that you have it link up, so you have your inventory management system, your POS, we call it point of sale system, and it looks at your LIFOs and FIFOs, your last in and first out inventory, and then it also looks at um, the sales, right? So it looks at what you have left and what you have remaining to sell and what you have available. And then it also lets you know when it's time to reorder items for your inventory. So we just want to make sure that you're calculating all those things correctly and you understand what they are. So we're not going to go into detail with that because we had a big discussion on that last class. But if you have any questions about inventory management, or if your business consists of that, please let me know. I know we had a few that did last class, and so it's good to go over that information if you need it. Okay. All right. I do want to focus on some pricing structures. I have a great video that I want us to watch a little bit later after break. But the biggest pricing structures we're going to talk about is cost plus pricing. So, cost plus pricing is really a general markup percentage that's applied to the price to cover the operating business and expenses and to generate a profit. So, we talked about that kind of before. The whole point of me telling you about these different expenses and you understanding that, you're going to have business costs, you're going to have business expenses, but you're going to have a markup, right? You're going to have an overhead rate. And all of those things are going to help you finance and fund the business, also give you profit, and help you be more profitable in your business and your industry. It also helps you reinvest money back into your business. Say you want to buy new equipment, if you want to hire someone, or if you're going through cyclical changes because of seasonally, production may be higher or lower based on the different seasons because of your industry. So you really have to have that markup and that overhead rate to cover the challenges that you may go through in different seasons, because every business has their good seasons, their slow seasons, their fast seasons. So you really need to start to understand what those are, and make sure that your markup is suffice for you to operate your business for the whole year. Okay. And then value based pricing, we talked a little bit about that just recently. It really depends on the value and benefit of the product to the consumer. We talked about that consumers like quality, they like things, they like to know what's inside of it, ingredients. I had a friend just tell me that they had some skincare that came from China, and I said, "Well, I would love to get some of the skincare, because their skincare, they're really known for good skincare and their products." And I said, "Well, can you tell me what's in it, because I'm allergic to certain products?" And she sent me a picture of the ingredients, and it was all written in Chinese. So now she's going to have to translate it for me so I'll know what's in it. But the reason why her family can charge this amount of money is because of the ingredients. So it's in the value that has been placed on that product. Okay. We just talked about the master classes that different speakers and business owners have been advertising their masterclass, because they're a professional and they can charge you this amount because there's value in what they're speaking about. They've shown you that they are worth the price that they are charging you. Okay. And then dynamic pricing is really based on the demand of the market. And we know that price goes up based on the demand. So if demand is high, the prices are high. With supply is high, the price is low. So you really have to think about that when you're doing your business, right? I've noticed that some of you put into your threats for your SWOT, your strengths, weaknesses, opportunities, and threats analysis of yourself and your competitors. And some of you did mention, some of the barriers to entry to get into the market and the demand, that there's also a high amount of producers for that particular product or that service. And so, how can you compete with those individuals, right? So it's really based on the demand. But if the market is dictating that they want more of your product and they want services like that, and that's where that niche market comes in. And there's a great video if we have time. I found a good niche market video, and we talked about the niche market, right? So the niche market was basically you could be in a big industry. We can talk about, beauty or food, and you could be in a big industry, but then there's a specific amount of people that need certain requirements. They may have dietary restrictions, they may be allergic, they may, have other issues where they can't utilize or eat certain foods. So then that becomes the niche market. Okay. So some of you asked me, in your plans that you were writing for me for your pitch decks and the homework, you asked me, well, how can I be in a niche market if I'm already a niche? Well, if you're already in a niche, that's fine, but you need to identify what market you're in. So if you're in the IT market, if you're in the engineering market, you need to identify what type of engineers, what type of companies are going to be utilizing, because there's so many different types of engineers. My husband's an engineer, so I know there's so many different types of engineers. So what type of engineer, and then what service and product are they providing? Do they work with the government? What are the type of government work do they do? Do they do weapons? Do they do shipbuilding? Do they do machinery? You really need to be very specific when you talk about that, because the demand is there. But if you're not identifying that niche, people don't know really who you are and what you're providing. Okay. And you can charge that dynamic pricing based upon the demand. So as the demand goes up, your prices are going to go up. That's just how it works in this market. Okay. Budgeting. Like I said, I did put a spreadsheet on Schoology for you that has startup expenses. There's also one to create a business budget. There's a great video. We did go over business budgeting in bootcamp too. But I wanted to just highlight, the best thing when it comes to your business. We just talked about recently your operating expenses and understanding your costs that associated with your business. But you really need to create business goals, right? So what are those business goals? How much money do you want to make each month, right? And then you're basically going backwards. Each year, each quarter, each month, each day, each week, what is it you need to do? If you have to make if you have to make a certain amount of money each month, what is it you need to do each day, each week? How many people do you need to reach? What amount do you need to charge? We just talked about pricing strategy. So what is it that you need to charge to cover your overhead as well as your operating expenses and to get your markup and your profit? Okay. I did upload a spreadsheet. It's a spreadsheet more so. It's a document that we can go over before we go on break, and it talks about profit margin per industry. Okay, so that way you'll get an idea. Each industry is different. Okay, but really thinking about your business goals, they need to align with your budget. Okay, and your actions need to align with that. Identify your sales goals. So, like I said, what do you want to sell? How much do you want to sell each week, each month? How many people are you going to have to communicate with and reach? What distribution media are you using? Are you using resellers, wholesalers, retailers? Are you using the internet? Are you doing a pay per service? What are you doing exactly? Are you going to have people pay you directly? How are you going to do that? So we want to make sure that you understand that it's important to make those projected sales, right? And then identify all those business expenses, have them in a spreadsheet, make it clear so you know exactly what you're spending each month. It's just like your own personal bank account. So your business account and your business bank account are the same. You have to operate them and look at them differently, because you have to align them with your goals, but you still have to keep track of them, right? So identify the costs that are incurred, like we said, monthly, quarterly, and annually. Track your actual versus your estimated costs. So you're going to do an estimated budget of what you project to spend each month on those different operating expenses. And that spreadsheet that I put on Schoology is great for you. I'll show you that in a minute. And it goes over, all the different expenses you have, and it talks about, where you put them. It puts them in Excel for you, and it actually subtracts them out. You can do one. It has one for each week, each month, excuse me, and you can do it quarterly. You can do it yearly, and that way you'll have an idea of what you're spending. And then you'll know based on what you're spending, you're looking at your markup percentage and you're going your overhead rate, you're going to see, okay, well, in order for me to make a profit, I need to sell or produce or provide this many services to this amount of people or sell this many products to these amount of individuals each week, each day, each month. Okay. And sometimes people will say, "Oh, I project my revenue to be 100,000 in 1 year." It's so unrealistic. How are you going to reach that goal? And that's when we go back to the SMART goals: specific, measurable, attainable, realistic, and timely. It's not realistic and it's not attainable, especially if you're just starting out. You're doing it yourself, okay? And you haven't identified your distribution media. You haven't identified who your target clients are. It will happen at some point, but it's just being overly aggressive, right? So you want to be realistic with your goals and you start out slow. A lot of us have decided to do this business on the side, do it while we're working in our current careers. Some of us decided to we're retired and we can use this as our financial stream of income. So you want it to be a cash cow. You want it to work for itself. I don't know if you ever heard of a cash cow, but really a cash cow is something that just you don't really have to put that much money into it, much energy into it, and it produces money on its own. And that's what we talk about when we deal with like revenue, real estate, or any assets that you have. Also, when investing, like I do a lot of investing, and we talk about that too. Okay. And then purchasing that bookkeeping software is really what's going to help you. So let's go to Schoolology really quick. And I want to show you. Um, this spreadsheet that I have for you. All right. So one spreadsheet is your monthly budget template, which you should have for yourself already for your own personal business. I mean, your own personal self. Everyone should have their own budget, right? If you don't have your own budget, go ahead and make your own budget with this template. Okay. You have to have a budget because you need to know a lot of times people are self-funding their businesses. And if where is the money coming from? Maybe coming from savings and maybe coming from retirement money. So you need to know how much money you have left to put into your business. And then there's an unclassified balance sheet that's here. There's also a startup small business. We talk about taxes and things of that nature, but I want to show you the actual profit margins here. Here is the different videos we're going to watch today, how to calculate profit margin, cost versus price, markup, and then business expense budget. So here's a budget here, and then here's the startup expense spreadsheet. Okay. So if you just open it, it is an Excel document. It's taking a while to open. Okay. Have to save it and then open it. So yes, you have to save it and then open it. It's down here at the bottom. Let's see if I can just view it. Okay, it's taking a while to open on my sheet. Okay, here we go. So here's your startup expenses. So you have to view it. And then once you open it, I know it looks small here, but once you open it, it opens into an actual document for you to enter anything in that you need. Okay. Everyone see that? All right, good. So you can see that. So I just want to make sure you all know that that's there for you. And you can put any of the expenses that you have here, has all the different categories for you, right? So that way you understand bank loans, expenses. So it gives you a summary of all your startup expenses. Okay. So there's no reason for you not to use that because it's there. Okay. So I want to make sure you guys do that one. So that's on Schoolology for you. Um, and then there's another one that's here. And just go down to week 3. I had this reorganized for you guys. So it's all there for you, week 3. And then you have your monthly budget template, which I already showed you to talk about that already with you guys. And then the other one, here's a profit margin. And then here's startup expenses. Here's the other business expense budget template. So this budget is perfect. I love this budget. I think you all should use it because it goes monthly, right? So you can track any employee costs. Okay. You can even be an employee for yourself as well. Office costs, right? Any of those expenses that you have. So you put them in each month, right? Of what they are. Okay. And then that's your estimated. So this one is your estimated. You see expenses, planned expenses, and the people who do these for me, they're actual accountants and CPAs. So I would love for you guys to use this tool on your own so you can make sure that you understand it. And then you have your actual, what it actually costs you each month to do that for those different expenses. And then it gives you a variance. And a variance basically is a difference between the actual versus the budgeted. Okay. And it gives you some deltas to let you know, okay, you're over or under, each for this month. Okay. So whatever you projected is over or under that month. And then it gives you a delta for it. Okay. And then it also gives you an analysis of areas you need to focus on. All right. And that's one from January to June. And so that's how you access that. And if you need to just click on it, you can either view it, click it. If you click on here, you can just download it. Okay. All right. So that's good information. Okay. And we talked a little bit about business taxes last class. And we had a tax advisor that came on and he was great. And then so, these are just different tax deductions. There's a good a website that you can go to for this. I already put that on Schoology. But business vehicles, meals, travel, mileage, those things are on there. This needs to say mileage. Business interest expense paid, any expenses, interest expenses that you have, like for loans and things of that nature. Your home office deduction, if you're working in your home, doing a home-based business like I am. Some of you are doing a home-based business and you can use a portion of your mortgage. It's going to ask you. So if you choose to do the home office deduction, the tax software is going to ask you which percentage, like it's going to ask you actually the size of the room. It's going to ask you the percentage of time you utilize the room, even if you have a vehicle, um, your mortgage interest, utilities, and the portion that you're utilizing it for your business. Okay. Cell phone, same way, ask you that. Technology, a lot of times your technology, your tools and software, those are strictly for your business. So it's not going to ask you for those, but normally it will ask you for the different home office deductions. It's real popular now since we had COVID. A lot of people are utilizing their home office for their business and usually for work too. So they have to be really clear. And then any startup organizational costs, it asks you that. If you have a self-employed pension plan, like an IRA, it asks you that. Any self-employed taxes, income taxes, it asks you those type of things. Any health savings accounts, if you already have one with your employer that's set up or you have a private one, it asks you things like that. Labor costs for your W-4 and W-9, and cost of goods sold, selling costs, direct labor, manufacturing overhead. Any other fees it does ask you too, like administrative fees, if you have an accountant or you have an advisor, you have an attorney. So all those different fees, you can utilize some of them as business tax deductions. If you need more help with that, you can always email me. We will go back over that in business bootcamp number 2, and we'll have the CPA come back and talk. All right. So we talked a little bit about SIPOC. It's really about making sure that you have processes identified for your department for all phases of the product and service, right? So, and you're looking at any pitfalls, so OFIs, opportunities for improvement. So you look at, if you have a product or a service from the beginning of that product or service, any work that you have to do to create the product or service, that process and how it gets out to the customer, and then what is the experience of the customer. And so we talked a little bit about that last class, but there is a great video online about it. If you want to go into that, or if you want to wait till next class, you can do that. But you're really looking at all the roles of your departments and how they're involved and what stage of the process they're involved. And then if you see that there are OFIs, the pitfalls in the process. So say example, you have a delivery service that's going to be delivering your product to a certain individual, or you have it set up where your IT department is going to send an item directly to a feed to individual, or a product, right, to the individual, and they don't receive, your consumer doesn't receive it, or if they receive it and there was something wrong with the packaging or the product, or they weren't happy with it, what are the steps, or the computer didn't work, or the passcode didn't work. So what are the different steps you have to take to make sure that that doesn't happen, and what are the opportunities for improvement that you could have to implement, excuse me, into your business to reduce those pitfalls in the process. And that's really what it is. There's a great flow chart that you can look at. The flow chart really looks at symbols. We look at circles and squares and triangles and rectangles. So it's really precise. But you really have to think about this now that you have a business, and you have to think about, okay, me as a supplier, what is the input I have to put into this business? What's the process it has to go through for my product or service? And what's the output? How does it get to the client? And then when they get to the client, what do they receive, right? Are we giving them emails, feedback? Are we having them fill out a survey? Or is there a customer service line? Is there an IT person on hand that can help them if they reach any challenges? Or, for example, they don't like something that we did, or they don't like the final product. What is the process to help mitigate that? Okay. And that service. So that talks more about your homework, but I'm going to go ahead and take a break, and then we're going to watch some of these different videos. So today, of course, we know that you guys have been, going through your business plan. You've been going through your goals and your mission statements, and you're making sure that everything is precise. And now you're revising with some of the feedback that I'm giving you. So some of the homework will be today. You're going to actually go back and create a business budget. So you're going to utilize the spreadsheets that I gave you to do your business budget. Okay. You're going to put down your expenses, your startup expenses. You're going to look at calculating your direct labor, your direct material cost. You're going to calculate your overhead rate. And we're going to watch some more videos. We're going to practice it together. You're going to estimate your operating expenses and revenue and income by utilizing the spreadsheets that I gave you. And you're going to determine, that's going to help you determine what the cost is to run your business each month, each day, each quarter. Okay. And annually. Okay. And then from that, you can start doing projections, income projections of, what you want to make the first year. What do you want to make the first 5 years? Most businesses make their projections over the first 1 to 5 years. Okay. And then you're going to look at creating what your sales price and markup is for your product and service. So we're going to, of course, go over that again with the videos. I just went over it briefly, but I want you to make sure you have a clear understanding of your sales price and your market for your products and services. And then you're going to research some software, whether it's inventory software, bookkeeping software. I'm going to make sure you do that as homework. Okay. So when we come back from break, I have a lot of other information to go over with you. So, please come back from break. I want to talk to you guys about your pitch deck. I want to talk to you about consulting businesses. There's a like what the best form of model I would use for a hybrid model for your business in regards to if you're doing consulting, and how you're going to price out your products and your services. And as well as, I want to just break down, the distribution channel again, making sure everyone understands that. There's a great formula about calculating your overhead rates. We also are going to go over the markup, and then we're going to talk about the different aspects of net income and net profit. So please come back from break, and we'll go over these different strategies together. And let's see, come back in about 15 minutes if you don't mind. 7:45 probably be good. So that way we can cover everything and be done at a reasonable time, so you guys can go enjoy this beautiful weather since everyone's quiet today. And then if you have any questions specifically about what you submitted to me, I will give you the feedback through email. But if you have questions about it, please don't feel shy and you can ask when we get back from break. Okay. So if you could go ahead and take a 10-minute break, and I will see you all when you get back. Thank you for joining. Any questions before we get off? All right. Well, thank you guys for joining. We'll be back.